Hi traders, what an eventful week we had last week. Now, I'm going to try to cap these videos at 30. I've actually already done a 40-minute video today, but in the interest of trying to keep everyone satisfied and interested, I'm going to try to cap it at 30, which gives me limited time per section. So that being said, let's kick right off. So the fundamental concerns at the moment, the ongoing ones, the fear of general inflation, US inflation. Let's talk about that. So goods inflation, according to Wendy Edelberg, I like this. It has been extraordinarily high. However, the identifiable factors behind that has been largely as a result of pandemic-related causes, lagging supply and a surge in consumer demand. So increasing, obviously, we believe that if we can get COVID under control, we can see potentially then determine how much of that inflation is as a result of that, and so we'll see. But it is higher in the US than the rest of the world, but it is also a global factor. Now, we've got one of the board members saying that when we talk about Euro-Swissy or just general Swissy intervention, it is absolutely strengthening. There has been a large trade surplus, which has been helping to drive it. And so there is always a discussion of whether they're going to intervene. They have done huge damage to the markets in the past, so it hasn't gone away. There is something there, but they haven't. The language is relatively calm at this point in time. And then speaking with regards to the general global market bubble, we'll obviously keep an eye on that. We'll see how that's going. We'll have a look at the charts. That hasn't really gone away. Having a look at major news this week. So out of Australia and Canada this week, there's rate statements potentially reflecting inflation responses there, and out of the US CPI, which again also might give us indications of responses at the time, or responses to inflation, or actual results of inflation as it impacts individuals. PayPal, so finally dug something up here, which is why PayPal was actually downgraded. So I don't generally subscribe to any fundamental sources, so this is me doing my own kind of digging, but finally here, kind of PayPal being downgraded, and therefore that then being that at least explains to me why the share price would have dropped. And actually, ironically, this was in response to a couple of deals that they got over the line, which you would have thought might have propped them up, but actually that implies a concern over too much competition. Okay, that being said, let's move over to the chart. So let's start off with the VIX. Okay, so the VIX had some big moves to the upside. So it's significant because, first of all, if we look at it on a monthly basis, we kind of zoom out and have a look at it. There's very few times historically when we've been above 30 in this area. Now, we're not in it just yet. We've attempted and fallen back through it, but we've also broken these lower highs coming down this downtrend, which means we're now in a different phase. We're either going to go sideways or we're going to start heading a little bit higher. And it kind of makes sense. It at least explains why some of the motions, some of the movements we've seen in the market lately have been quite big. So just FYI, this is my third recording because I'm now trying a new format where I cap it at 30 minutes. And so I'm trying to stick to that. So just, right, let's have a look at that dollar index. So dollar index did produce this kind of gravestone doji. It has effectively broken the low. Usually that would mean that there's a correction down to 95. You can see actually there was an attempt to continue onward. So the daily looked good. Came down and tapped 95.50, then managed to push a little bit higher, but then actually closed a little bit lower. If we look at, say, euro dollar, for example, we had the same thing. We finished, or sort of after non-farm payroll, we were pushing down towards the lows, and then we actually managed to close a bit higher. So what does this mean? Well, it kind of hints at the weekly here, potentially looking at a continuation of the weaker US dollar, euro pushing a little bit higher up to 1.14, potentially up to 1.525. So if that's the case, I'm going to be looking for buying opportunities above that. If you look at the 4 hour, it's in a nice little consolidation. Once we break above that, especially 1.14, I become bullish up to 1.15. If we break below that, coming down to 1.12 to see how it handles that. Does it break and continue lower? So yes, there is now a very real possibility that the dollar could still continue to weaken, or we could just see continued sort of sideways movement. Looking at sterling against the US dollar, it's definitely weaker, but might manage to actually hold at this level. You can even see here, if you look at it on the 4 hour, it's attempting to create a bottom there. So it could just head up to the top of the range. That is a possibility. In principle, I'm still kind of leaning towards a stronger US dollar in the medium term, but in the shorter term, this correction might not have played out yet. Aussie dollar against the US dollar had a big move down, right down to 0.7. It's a good place for it. It's now overextended, without a doubt. It's a good place for it to do a bit of a correction. And if we do get that correction this week, certainly for day traders, there's going to be some buying opportunities to the upside back up to 72. But it also shows you that, yeah, we've got that strong dollar. So in principle, strong dollar is still pretty much on the table, and therefore short trades or signs of exhaustion and any kind of price action signals that support the idea of getting in line with that medium-term trend make sense. But in the shorter term, I don't see why we couldn't have a bit of a correction to the upside. Kiwi dollar against the US dollar also breaking below these lows and breaching a pretty significant level here as well. So all of this meaning we could just get a shorter term correction up to these levels and then a continuation Very real possibility. So dollar yen back down to the bottom of its current range as well. So all of this is very much range-like behavior, hinting at that possibility of ongoing range behavior. We'll have to see that. Dollar yen does its own thing anyway. A strong rejection here. I can't see why we again also why why it's not unreasonable for it to head down to 112.25 or down towards 112. But also you can see that 4 hour just range-like, finding a bit of a base here, trying to push back up. So quite choppy on the majors. Dollar Swissy here within this range as well, within the weekly, within this range, coming into sort of a midpoint now, but also, and again, you can see that level of potential support on the 4 hour, but it's closing lower. There could be a breach of that and then a move down to the bottom of that range, 91.10. Then dollar CAD. So this one also doing its own thing. There is definitely a level of resistance where we are, but also looking relatively strong. Looks like it wants to continue to the upside. So I want to see if this level holds where we are. Alternatively, see it continue up to 29.50 and then take a bit of a correction to the downside. This level is quite strong. That 4 hour looking pretty good because it does appear to be wanting to push on beyond that and then work its way up to 1.29. So we'll see how that goes. Euro Aussie. Okay, so these are the cross pairs of interest to me. We can see price heading up very much now, overextended on the daily, back up to 1.62. That weekly also really nice big moves. That 4 hour now overextended. So for me, I'm leaning towards a bit of a correction first, maybe down to 1.6 and then a continuation of that. Overall, the trend really nice and strong. Euro Aussie and Pound Aussie were some of the best trades happening on Thursday this week. I didn't partake after NFP, but because of the, how the market can swing multiple kind of change directions a couple of times after NFP. So I wanted to sort of stay out of it, but Pound Aussie and Euro Aussie looking really good, continuing up to their next levels. But then they're going to need a bit of a correction, if not on the daily, certainly on that 4 hourly time frame. But I like those, and that's why they sit on my list. Euro GBP also looking pretty good for buys up to 86, 0.86. A little bit overextended on the 4, having broken through this level. Any kind of retest would provide some buying opportunities to the upside. Euro Swissy, ladies and gentlemen, it's an absolutely beautiful trend. I would say in general, currencies can be really tricky for swing trading these days. And in fact, this one, unless you got in on the break of this level of support or potentially a retest of that, here's another break of level and come back and a retest. They're just really tricky to get into. Even that 4 hourly has actually been quite tricky. I think I had one trade to the downside this week, but this kind of chart would be the one where I'd be expecting to find a lot of opportunities. Pound Swissy also breaking through this level 1.22, now leaving that kind of open to head down a little bit lower. So Pound Swissy and the Euro Swissy and also Aussie Swissy, I might add, and also Kiwi Swissy, all of these breaches below these major levels. I like the idea of looking for retests and shorting opportunities on those. I admit, of course, that I can see here they're a bit overextended, and again, a retracement to the upside makes sense, but for the most part, I'm more bearish on these than bullish, and just keeping an ear to the ground with regards to the S&B if they're going to mutter or do anything about that, or potentially. Obviously, right now, they're currently buying and selling their currency to balance things out a bit, but if they do anything beyond that. So EuroCAD, I like this. We had a really nice strong bullish candle last week, the week before last, I beg your pardon, and then this last week we've pushed a little bit higher. This is a nice bullish candle here. It is range bound on the 4 hour. You can see that there's the top of the range. I'm looking for a break outside of that to see it continue up to 1.46 or higher, and so there could be some nice opportunities. Let's see, it could even go as far as 1.4660, which puts it up at this area really for now. Pound CAD as well has its own barrier that it's got to work its way through. This one I'm cautious of. This really does need to break out. Solid daily candle to close outside of this range before I'd consider engaging in it to the upside. That's what I'm looking for. Aussie CAD, interesting enough of the whole lot, because that's even weaker than the Canadian dollar. That's actually moved to the downside. You can see it's beginning its 4 hour retracement back up into this level. So might be looking for some shorting opportunities there. If it just continues all the way back up to this level, then it becomes more and more likely we're going to see the market move upwards. But you can see it's broken through this major level. Therefore, the next one down is 0.89, and that makes more sense to me. So looking for shorting opportunities there. Euro yen, all of these, okay, euro yen, pound yen, all of these have now, nice and bearish, some really good, decent trades to the downside. It was quite choppy on the 4 hour for a couple of days. They've come on to major levels. They are a little bit overextended. Again, there could be a bit of a correction to the upside on the cards now, and so there might be some buying opportunities potentially on these. In principle, I do like the idea of if they've broken these lows, they're going to continue down. So looking, in other words, until these trends are broken, certainly on the 4 hour, I'm going to remain bearish and look for shorting opportunities to the downside. Let's see, Kiwi yen as well, massively overextended to the downside, breaking these lows. I am bearish on it, but we do need some corrections. And so again, there might be some pullbacks into these levels of previous support to retest those and continued shorts to the downside. Again, finishing on CAD yen here, bearish close behind that, nice little continuation, potential continuation signal, but also it's starting to put on the brakes here a little bit. So again, I'm saying there is a possibility here there might be a bit of a correction on the daily and a continuation to the downside. The 4 hours really going to give me clues on whether I can keep shorting it or whether I need to potentially look for temporary buys to the upside until we have a deeper correction or bigger correction on the daily. All right. Now, moving on to precious metals, having a look at gold. So gold is kind of stuck in quite a bit of a range. It's relatively messy. What I like about this is if we start to break above 1800, then I'm going to start, or 1830 specifically, I'm going to become more bullish. If we break back below 1750, and I think back below these levels here, I'm just going to mark these levels here. If we start to break below that, 1722, I will then look for shorts to the downside. In between that, it's quite messy and a little bit all over the place. It actually looks a little bit more bullish now. It's on a 4-hour uptrend, and so I'm expected to head a little bit higher first of all. Then looking at silver. So silver, between the two, silver looks a little bit more clean or a little bit cleaner, and actually looking here, silver now looks quite intent on heading back up. If it can get past these levels here, it's heading up to 23, certainly here, and then it might resume its trend to the downside. Overall, there's a clear mixture across all the charts of both sentiments buying and selling, but it looks like at least there might be a little bit of a move to the upside, excuse me, in the shorter term, and then we'll see from there. Copper. Okay, so copper here, very messy. It is within a range, so there's actually a high here down to a low, to a high, to a low. It's ping-ponging all over the place, so I'd sort of stay away from that until it breaks above or below that. So then having a look at the GCSI index, I'm just looking now sort of towards crude oils and other similar types of commodities. We have closed relatively bearish off that 50 level here of support. We could see a little bit of a recovery. If you look at that monthly, we might potentially get that, but at the same time, I also think we could go a little bit lower and test perhaps this 500 level a little bit lower before maybe getting a recovery on that. Moving on to, say, West Texas crude, you can see here, this candle is not a particularly bullish response. We did break below this level, managed to push back up above it, but we've already broken through this major level where the sellers stepped in historically, and therefore now heavy selling to the downside is a possibility, but this level that has held it is also quite strong. So what might simply happen this week is a move down to 62, excuse me, to test that level. There might be some pullbacks before shorting continue to the downside. So it really is at a fork in the road where it can go a little bit higher or a little bit lower. And therefore, day traders will be looking for shorting opportunities probably at first, and then to see if those get broken. For example, if we look at Brent crude, that's come down and tapped this level, and here it's still sitting on the bullish side historically of this. I would say that if West Texas breaks below that, we're going to see this do that as well, and then it's likely to see these head further down. Okay, moving away from these to other commodities of interest. Sugar, overall, still not worth my while to trade. Very, very messy on the daily, slipping lower back into these highs here in the past. It might very well hold where it is. It's now reached the moving averages. Not much of a move so far. We're at the beginning of the month. That was quite a bearish move. And so here I'm looking for shorting opportunities to see how price reacts at these levels. If it gets back over that, especially the 4 hourly, if it can get back up above these levels and go back into producing higher highs, that is then going to give me a nice little bullish setup for it to resume to the upside, but it's not looking promising at this time. Coffee. So coffee is showing quite a bit of exhaustion where it is now. There's a bit of a failure there, inside rejection candle here. So break of the low. This makes more sense to me. A move down to 220, even down to 200, certainly should be on the cards. I mean, the 4 hour looks okay, but it's quite a deep retracement, and I expect perhaps there might be a rejection up here. There might even be a good shorting opportunity if we do get, let's call it a double top. It's looking relatively okay here, but I think 250 is going to present a bit of a problem, and it's going to have a deeper correction as well. Okay, on to wheat. So wheat, we have here wheat, big correction down to this level. Can the level hold? We'll have to see. So much exhaustion here that I think it's unlikely. It would have to recover from here immediately to go up. Once it gets sort of over halfway through this candle, it starts to look more and more like it's going to carry on. But where it is now, it actually looks like it's more likely to fall through and fail to hold that level. Here you can see it's pulled back. It's attempting to hold on that. If it just falls through immediately, then it's probably going to hit lower. Cotton as well, big deep correction. That monthly closing quite bearishly. I think we've got a good chance of hitting down to 100. Potentially even down towards 90 or even 80 at this time. It's just quite a big correction. So I'll be looking for perhaps a move up to 110 and then shorting opportunities on the 4 hour. Okay, on to the global indices. So let's look at the Dow. Okay, so here's the thing. The fact that the market has become more and more exhausted over the last few months, where we see it sort of starting to stumble, I don't think we've got through that yet. So in other words, I don't think we've got two choices. The market can take a breather, go sideways for several months, rest, recuperate, and then resume to the upside, or it can take a deep correction to the downside, and then it lets off the same amounts of steam, and then it can pick up from there. I can see now it's actually attempting to pick up and break above these highs to go long to recover from that. So I'm looking really for signs of it being able to hold in a stable fashion, like a nice little bullish finish this coming week. This week is indecision, which means it's exactly that. It's not sure if it's going to be able to hold or if it's going to go lower. And I'm leaning actually a little bit more towards, I don't think what is inherently kind of why it's so tired and exhausted, I don't think that's gone. I also don't see much beyond these highs for now. I think there might be a recovery and maybe an attempt back up to the highs or attempt drop. And that just makes it really tricky because buying up to the highs is one route or selling down is going to be even trickier. That's why it makes it almost better to stay out of it. What I'm looking for this coming week is to see if these can hold. S&P as well, you can see it's trying to form a bit of a base here, and that is certainly going to attempt to come back up to these levels and see if it can break above that. And if it can, it'll produce a nice little bullish candle, and then the story being that it's going to then make a run back up to those old highs. On the other hand, if we fall through that, if we fail to do that, we're going to be dropping quite significantly down to these other levels relatively quickly, and it's going to hit the media. It's going to be quite scary. And there will be some story attached to it, who knows. So I'm thinking, and again, I'm leaning just that 55, 45 that it's going to head lower, just that little bit more that it's going to happen. The weekly candle here as well, we've started a bit of a correction here. So we've had a long run, and suddenly in the last 4 candles, we've had 2 seller candles so far, or at least this is an open month. We've had more bearishness into the market and exhaustion around major numbers. Therefore, I'm just saying there is a real possibility. I could see that the 4 hours wanting to push high and recover, and because there are buyers, the further down we go, the more buyers they kind of are on. So they're always going to be pushing up at these levels, and so they look like that. We head away, sort of go and have a look at Russell 2000. We're back into the range. The real concern for me is that this was a failed breakout, attempted to break out after a long consolidation, immediately failed. What often happens in cases like this is the market immediately goes to test if it can break out the other side of the range or if it can hold. And so really this week, it's to me is all about, can this level hold? I think that if we close bearishly below that on the weekly, we're going to see even further downside in coming weeks down to these other levels. And they do that really quickly. It always falls faster than it climbs. Okay, so the FTSE 100 as well, we see it's dropped back below this level of resistance. 7,000 is psychologically and historically a big significant number. So can it manage to do that? It is holding, but it's also finished with a bit of a rejection candle. So 7,000 is really a level I'd watch. If we close below this, we're going to see this start to drop down to 6.8 and 6.7. But if we can manage to close back up above last week's high, then it starts to support the idea of there maybe being some renewed strength in the markets. So the DAX as well here, this is quite a bearish candle. I don't see why we couldn't come down and test this level. I don't think we're done yet. There's been a level here in the past, but this isn't really a strong recovery. So we might have a drop and then a recover, bounce off that. And this is why it's so dangerous. This is why it's such high risk at this point in time. We've got EUROSTOXX, big drop and a bit of an indecision candle. Again, it really is at a bit of a level here where we've got that level in the past. If we drop below that, we're going to see it drop a little bit further. And of course, this could start going across the board. Nikkei as well, back down to the bottom of that range. It's not really clear anyway, and it's highly risky. It is trying to bounce from where it is here. But again, all these signs, if they start to head lower, and this is, like I said, that's where the danger is, then I expect them to perhaps fall through this. And so just talking here on the S&P, the ASICs as well producing a lower high here, then another lower high. All of this hinting at there's more sellers in this market now. And so, yes, this level it's at now should hold. It should. If it doesn't, we're going to see quite a big drop down below that level. Okay, so let's move on to equities of interest. All right, so, and Royal Mail. Okay, so I think they've done particularly well. And this is a nice rejection of this. It's got to get over the 500 level to head up, excuse me, back up to these highs there. Definitely going to battle with, let's call it 550. For now, it's going to be a bit of a struggle. And actually, the question to me is going to see if this is a consolidation breakout. But it's fared relatively well. Okay, Amex. So Amex breached this level of support, closed a little bit higher. Not a great sign of weakness, but it has come back into the moving averages. This is legitimately a potential area for it to turn around. I can see that 4 hours trying to do a bit of a higher low here, and so potentially that's where it's going to attempt to do it. But if it does start to break these lows again, we're going to see drops down to 140, 134. ARC Innovation broken outside of it. So take this into account. You know that ARC Innovation has broken through levels of support. This one here down to the monthly and heading down to 90 at this point in time. And actually, if it doesn't hold at that, we're going to see them drop down to 70.20. So just something to keep in mind. AT&T. Okay, so AT&T. Actually fell further. I did do a post on it this week on LinkedIn. It actually dropped all the way down almost to 22. So let's see what happens. The monthly I'm going to disregard for now. That it's, some buying opportunities. People are going to be buying at these levels and it's coming back up, but it could find some resistance here and continue down. What I'm thinking though is that if it does continue down here, 21 is certainly a very feasible place to go. This is a big drop and a very strong buying response to that, but this is not a very bullish signal in itself. It's an attempt and a fail. There's no reason why this couldn't continue back down to 22 and even further down towards 21. We'll see how that goes. It really is how it handles in this area over the next couple of days, but it'll be interesting to see, especially if they do finish low. So there are some signs that the markets might not be done with letting off some of their steam. So Berkshire Hathaway within its range, this is important because when it comes down to the bottom of this range, this is a good area for it to bounce up and recover and then head up to the top of the range. And so we would see that with a small indecision candle, spinning top doji, or any kind of a bullish little green shoot candle there that could work. Alternatively, excuse me, if we break and close with a heavily bearish candle this coming week, we are looking at significant drops then potentially down towards 250 or down towards 225. So it's going to be interesting, as I said. BP. So BP and Exxon and a couple of others, they've corrected back into these levels. Overall, they're not super bullish. There's some sort of failure over here, and so therefore we could see the market's heading down. It's actually attempting to climb at this point. I want to see if it can hold where it is now and then perhaps recover from that. So quite a few of the markets are at a level where they're holding that line, and if they can hold, then there's the potential for it in subsequent weeks to recover. Alternatively, if they break through those levels, then I would expect bigger drops. I know it sounds obvious, but not necessarily. You have to kind of see, and this is why there's some risk in these. Here we've come back down on Exxon, back down to these lows. There we've got so far a bit of an indecision candle for the monthly, and here it's attempting to climb. It's got to get back over that 63 level. Coca-Cola. Look at this within its range. Nice little bit of a green shoot here. But again, it hasn't really tapped 52 yet. So I see concerns. There might be some strong resistance up here and it continues down. Again, might see further lows on that. General Motors. So General Motors, it's really about all this failure here. This is really the problem. And last month, last month wasn't even able to get there. So this ain't done. This is not, here I'd be really surprised if now it can manage after all this failure, suddenly this week it's extra strong when most of the market looks quite weak. And if it does, then that's an indication that the whole market is actually quite strong. But I'm just not seeing a lot of that. Even here at JP Morgan Chase, that is quite a bearish finish for the week. To me, this looks more like it wants to head down to 146, 140, back down to these old lows here. So again, it's all going to be to see. I'm expecting if it's going to hold, it's probably going to, if there are any big drops, it's got to recover. It's got to go all the way back up past highs of this last week. Here, for example, Meta, Facebook, has got a downtrend, confirmed downtrend on that weekly, and it's tested both a weekly and a monthly level here. This is it. This is its holding line in the sand. If it can't recover from where it is now, it's down to 250 or down to 200. So that's why I say watching from the sidelines. There will be buy orders at the lower levels for anyone who's got cash lying around. That's of course that there will be bounces off those. But the fact that it's breaking through these levels or not able to hold those levels anymore is in itself signs the market is just overvalued at the moment. Okay. Very choppy. It's trying to stay above this level. Again, a drop below that. I think this time it might then let go and then actually head down towards it. It's consolidating nicely here, so it's not a bad thing. But it's also, again, each week it's dipping a little bit lower below these levels, and eventually it's just going to let go. Apple. Okay, so let's talk about Apple. So Apple, I was talking about, couldn't there be an experiment? We broke these lows. We actually went up and then came back down. But here's where the problem is. So Apple is definitely running out of steam. If it didn't do it last week, there's just failure to go any higher here. So 170, call it 170 down to even 162. This is kind of where it is for the moment. I think it's now even more likely to come back down to 140 or potentially a little bit lower. So it's really struggling quite a bit here. So I'll be looking for breaks of these lows here. Excuse me, NVIDIA. This is actually confirming that idea, looking more and more likely like it wants to head back down to 250 or down to 230. It's looking particularly weak and a nice little bearish inside candle at this point in time, starting to do that. So, okay, interesting to me. Again, there'd have to be some amazingly positive news to get the markets to recover entirely. And so look at PayPal, for example, this is now putting on the brakes. So it's getting smaller and smaller candles, some rejection coming in here. 175, 180 is where it actually wants to stop. It wants to go back up to 200, 27, back into this area. It wants to do that, and that might be something, if we do get that boost, this is where it's going to head up to that. But if we don't, if the rest of the markets fall through, this is actually sold off quite a bit, and so I think it might slow down in this area. It's really that 4 hours also looking like it really is now getting ready to jump up. at the very least, I think possibly a bit of a correction up to 207. So we might see a bit of that before perhaps heading a little bit lower. Let's look at Tesla. Tesla's also in trouble. And when I say in trouble, I just mean shorter term stuff. It's coming back down to the lows. It's got within a range. You can see it just ping-ponging between these 4 candles here. So there's a range here. Again, it should bounce. If it's range bound, it should bounce off that, head back up to the top of the range this week. If it doesn't, if it breaks and closes below here, it's down to 900 at the very least. Makes a lot of sense. Then maybe a bit of a recovery off that. But it's certainly not. Look, I think that it's best, because there are so many of them ranging, it's best to assume that buyers will step in at the bottom and attempt to push it up. And if they fail to do that, then that hints obviously at more moves to the downside in the coming weeks. But again, then I take it to kind of look at the spider, and the spider's broken a major level of support. Strong, heavy selling pressure. We knew this was going to happen. Broke through here. 100 in its sights, almost certainly back down to that. So you can see the volatility increasing here. So if that's going to head lower, why isn't the rest of the market going to do that? Vanguard as well. So Vanguard is just starting to tip over a bit. It's testing this level. It should hold where it is now. Therefore, if it fails, it's coming back down to 400. And you can see that, again, the 4-hour is determined to try to make that happen, but it's going to have to close higher. So you can sort of see where that is. All right, let's move on to treasuries. So we were kind of talking about if there was going to be an increase in volatility in the markets, it makes sense that bonds, treasuries would climb a bit, and that's exactly what we've seen. Seen them pushing through resistance here. I can't see why they won't continue to do that, again, in line with continued volatility. Euro bubble struggling with its own resistance level here. I expect these to probably head up to the top of their recent monthly ranges, the EUROBUND as well. Why not head up to the top of the range here? All the conditions are right for that. Okay, finishing off on crypto. So it's Saturday, and I acknowledge, of course, that Sunday, something else could happen. You're only going to be seeing this on Monday. So let's see how this goes. But I have to tell you, the very fact that it could drop through from 50 to 40, down to 40,000 today in one day is not a sign of strength. And so I posit, therefore, I can see a bit of a correction coming up. There are buyers. Again, why would there not be buyers at this level? Why not just put it out there, say, look, I'll put, if I've got $500 or $200 or $1,000, put it out there and say, look, if it hits 30,000, I'm buying. So there will be buyers at these key levels. And in principle, I can't see why over a long enough timeline, cryptos won't recover. But it looks like for now, there's a massive hit. They've tested 40,000. Can 40,000 hold? Well, if in one morning it can touch that, why could it not potentially go down to 30,000? So 40,000, 30,000, why not on the table? Let's see how that goes. And if the rest of the market is going to do that, it makes sense that so will these. Okay, I wouldn't take it personally. You can see here Ethereum trying to get back over that 4,000. That's a strong rejection of that, but that's also potentially a bit of a crack in the hole. 3,000 is very acceptable for this to come back down towards that to let off some of that steam. It's going to be tricky so far. If we can see that there's a bit of correlation between them, it's going to be tricky for them to stay above that. Then we look at NEO. NEO's next level is down at 25. It's broken this level. So it's now free to head down to 25. You can see a bit of a correction happening up here. For me, these are potential shorting opportunities back up at these levels. Might be some shorting opportunities back down to those levels. So maybe what happens this week is they get up, they come back down, they test the level, and they don't go lower than that. But at least it is something I have to accept that could be happening here. You've also got to move down to 1 on Cardano. But Cardano's let off so much steam, it's not really got that much really to let go of. And actually 1 would be a nice sort of round number for it to settle on. Ripple as well, break. You can see a lot of them trying to recover as much as they can today. But the problem is they've already kind of broken the seal, so to speak. And so I don't think it's crazy to think that they, especially if the rest of the market. So now we've got so many different markets trying to just prop up to stay where they are. And that's a lot of pressure to be on. If the market was bullish, they wouldn't even be testing these levels, let alone breaking them. So why are we breaking them and testing them? And so we're probably running a little bit out of steam. Back up to these levels, we'll see where they are by Monday. Maybe they've tested this on Sunday and they headed back down. We could see more of that. I don't know that cryptos have a much further way to fall. I think 40,000, 30,000, I think below that is a little extreme. When I look at the other pairs, anything can happen, of course. But yeah, not really convinced that's going to be the case. All right, ladies and gents, I'm going to wrap it up there. I want to wish you a wonderful week, and I will chat to you. I'm exercising great caution on some of these markets. The cross pairs and currencies seem the best to me. Thank you very much.